Hey everybody, what's going on? It's James here, and in this video, I'm going to share my thoughts on the current state of Bitcoin as well as the stock market. Shot a video a few days ago covering a lot of these topics and seemed to have accidentally deleted the video. So we'll just start from scratch, and we'll start off with a Bitcoin versus US dollar chart. And this is a daily chart, so I'm going to look at the weekly real quick. And so the first thing I'm going to point out on this weekly chart is we do have a confirmed head and shoulders. I say confirmed head and shoulders because what you're looking for with the head and shoulders is you're looking for increased selling volume when the right shoulder breaks. So if this is the right shoulder, we would want to see increased selling volume, which is exactly what we got. So that looks like a confirmed head and shoulders. When I look at the head and shoulders and I measure the height of the pattern and then look at the breakdown target, that puts the target down around $35,000. That also lines up with a roughly 80% retracement, which is, again, not to be confused with an 80% drop. They're not the same thing. It's an 80% retracement of this move. That would be 37,638. I did a video in the fourth quarter of 2025 calling for that exact target, and now we can see that this head and shoulders is pointing to that area. If I put a fixed range volume profile in there, so I just measure the volume throughout this cycle, we can see that our point of control is sitting right around $27,000. So there's quite a ledge right there. And typically what we've seen in past bear markets with Bitcoin is it goes down and then gets front ran. As it gets close to that ledge, it then gets front ran from that point. For example, that ledge was around 12,000 in the 2021 bear market and down around 1,000 or so in the 2018 bear market. So we have several things that are all pointing to the same zone, which makes me lean to the bearish side still. The other thing that makes me lean to the bearish side is the fact that there are people on social media, and I'm not in any way knocking them. I'm just saying that we have different opinions. There are people on social media who are really pushing the idea that this is a new uptrend because it's pumped roughly 30% off of its low. Now, I am going to knock the following people. There's several gurus with large influencer accounts, large follower accounts, who are claiming that every time Bitcoin is pumped 30% off of its low, that it's marked the start of a new bull market. And they're saying that it's 6 out of 6 times in history it's 100% accurate. That's completely false. It's completely inaccurate. Yes, if you go back and cherry pick the cycle low, when it pumps 30%, it never goes back down. But that's, I mean, we could say that with just about anything. Like the cycle low is the cycle low. But in every bear market, there's typically 2 to 4 dead cat bounces that go more than 30%. In fact, it's quite standard to get 30, 50, even 100% pumps. For example, back in 2017, this initial drop actually pumped over 50%. This drop actually pumped right at 100%. This, was over 30%, so on and so forth. And each time they made a new low. Same thing in 2021. This fell back about 50% and then proceeded to pump 100% off of its low, 143%. And then, of course, it made a new low. Same thing here. So, even more recently, it pumped more than 30% from this low back in November. It pumped about, oh, my apologies, only pumped 21% there. But it did pump more than 30% off this low, and of course, proceeded to make a new low. So that's complete nonsense. There's a lot of people that post that stuff and it gets really high engagement because people eat it up. They comment, they love it, they reshare it, they all this stuff. And it's like, guys, all you have to do is pull the chart up and look for yourself. It's factually inaccurate. So those are some things that I'm saying in the Bitcoin chart. It's not surprising that we got a bounce. I don't know why people were surprised by that. This is obviously a downtrend. This is consolidation. So, you can't really call this an uptrend yet. You can call it consolidation. And then you can make an argument. It's either redistribution before more downside, or it is accumulation, right? Either way, it's not an uptrend. It's just consolidation. But the thing is of course, it was likely to bounce. I mean, if you look at a weekly chart, it was sitting in oversold territory. And RSI on like a 5-minute time frame, oversold means nothing. But when you're talking about a weekly chart on Bitcoin, every time it gets oversold, it tends to bounce. It doesn't always mark the start of a new bull market. For example, back here, it bounced from around 18,000 up to about 23, 24,000 and then, put in a new low. So typically speaking, back here it didn't mark the bottom. Typically speaking, you're going to get a bounce just because you're so oversold. The market's out of balance. It was also oversold versus QQQ. There was just a lot of reasons that it should bounce there. And the other reason it should bounce there is because you had all this trading volume back here. So there's liquidity sitting there. So what's happening is there are some people who think this level is going to hold, and of course they're going to be buying. Other people think it's going to fail and they'll be selling. And so you have that battle being fought. That's what creates the consolidation. And we don't know who's going to win. You know, we can all have our opinions, but really we just have to wait and see. And because right now it could go either way. So those are some things I'm seeing there on the US dollar chart. Some really interesting things, at least I think it's interesting because I'm a weirdo and I obsess over charts. If we take a look at Bitcoin, I think I posted something, maybe even talked about in a brief video, Bitcoin versus gold, right? So we had a chart that looked like this. I talked about how this looked like, in fact, we can do this. I talked about how this looked like it was in potential distribution, a multi-year distribution, right? Look something like this. Put it on a log chart. It's easier to see. If you notice, the 2021 bull market had roughly equal highs with the 2025 bull market. Okay, so that's a little bit concerning. That's a bearish thing in my opinion. But the thing that's even more bearish is if I take Bitcoin and I divide it by precious metals, meaning the market, gold and silver markets combined, I get a chart that looks like this. Put it on a monthly chart. And what you're going to notice is when we do that, this looks like a giant range. Okay, that's what this looks like. And markets love to test the bounds of their ranges. So up here, it came up and tested the upper bound, and then it closed within it. It left a bull trap behind it. And of course, bulls were trapped up here and they were punished. And now it's sitting down here around 16. And really, the low is going to be down here around 9. And then if you look at 10, it's kind of lining up with this low here in June of 2022 and also the highs back from the summer of 2019. So I think this is very likely to test the bottom of this range. And if you look at that, what kind of drop is that? Well, just assuming precious metals stay fairly stable, that's going to be a drop of about 41% to get to 9. It's going to be a drop of about 45% to get down, roughly 40% to get down to 10, and then roughly 45% to get down to 9. So again, that makes me lean to the bearish side. Also, when I look at this chart, if I draw a trend line from our lows in 2020, it's going to look something like this. And to me, it looks like it broke through it, and then it's just retesting it from the underside. So obviously, all of those things are pretty concerning from the bearish point of view. As far as stocks go, I think the best play right now is to simply wait for this monthly candle to close. If this monthly candle closes above these old highs, there's likely more upside left in the QQQ. If it closes underneath these highs, then of course this could end up being a bull trap and then more downside. So I want to wait for that monthly candle to close. One chart that I did find myself kind of dwelling over last night was this chart here. And this chart is not bearish. This chart is actually more bullish than anything. And it's one of the few reasons that I do think, man, I might be wrong about this market being on the verge of collapsing. And I'll show you why. Because if I zoom out, this is the dot-com bubble back in 2000. And this is measuring the NDX versus money supply, M2SL. And so we can see it had its bear market, retested it in 2009. And if you look, when it tested the top of the range, which is what markets love to do, remember, because this is a giant range, see how it retested over here? It had a sell-off because a lot of people would be waiting to sell, so it sold off. And then, of course, broke through that level. And this helps to explain why we got such a violent pump over the last 3 weeks, because it was actually retesting all-time highs. It was retesting the all-time highs from the dot-com bubble versus money supply. So it retested it and went right off of it. And that's textbook technical analysis. Anybody who knows TA is very familiar with the concept of a support resistance flip, where you have a line of resistance, it gets broken, and then it turns into support, or vice versa. You have a line of support that gets broken and it turns into resistance. So this is, like I said, this is the one chart that I really, I look at and think, there is nothing in this specific chart that looks like a bear market or leads me to believe that stocks are on the verge of a bear market. It could end up being that we go through some type of sideways consolidation up here, and that would obviously change my mind. But right now, this specific chart flies in the face of all of my bearish theories. And so I wanted to point it out because, again, I do not have a crystal ball. I do not have a 100% track record. Nobody does. And it's important to consider that, you never know what's going to happen. So a lot of people, they want to go all in either on the bull side or the bear side. And it's a terrible approach to markets. Going all in, it works until it doesn't. I believe I did quickly cover this in one of the previous videos. Of course, this is our Bitcoin versus QQQ. We do have a cycle anomaly, so I do not know what to expect going forward in this chart. I don't know if this is an anomaly and it's going to go even higher, put in a new high. I don't know if this is, an anomaly that's going to end up going lower. I don't know. I do know that if I look at that chart, just a clean version of it without all the mock-ups and everything, and I put it on a log chart, it still looks a lot like the gold, right? Bitcoin versus gold. If you notice, it's barely put in a new high. I see a lot of these large accounts, and some of them are from traders that have been trading for decades. And so it's like, on one hand, I respect what they've accomplished, because just to survive in the markets that long, you've got to be pretty good about what you're doing. The markets are pretty quick about washing people out, other than the people who aren't trading and are pretending to trade, like a lot of influencers. But I'm talking about like the actual stock traders, that have been around since the 70s and 80s and stuff, before the internet, where they could just pretend. And so it's interesting to me how a lot of them are still calling for these new highs. Like I saw one today, and he said, he thinks Bitcoin's going lower, but then he thinks he's going to go to 300,000 in the next cycle. And I just don't really understand where they're coming up with those numbers, because every single Bitcoin cycle has had diminishing returns from the cycle previously. And it kind of feels like at this point that we've reached max adoption. And I know not everyone owns Bitcoin, but as far as like the number of people who are going to own Bitcoin, it kind of feels like we've reached that rough level. I just don't personally see this going to 300 or 400 or 500,000, but it could. I could be wrong. When we figure that Bitcoin today versus the QQQ is actually worth less than at the peak in 2017, that means that Bitcoin has basically went sideways for roughly 9 years. Well, about 8.5 years, it's just went sideways. That's pretty concerning. And if we get off of Bitcoin and we just look at the total market cap and we take that versus the QQQ, it gets even more concerning, because we actually put in a lower high there. And then if we look at that total market cap divided by precious metals, we get this, and we can see that this was a significantly lower high. So this is our 2017 crypto bubble. This is our 2021 crypto bubble. And this was the 2025 crypto bubble. And if you have a sharp eye, you'll notice that this is indeed a head and shoulders pattern. And if we measure this head and shoulders pattern, we'll take the conservative, the smaller side, and that's about 614 million. So let's just go ahead and copy and paste that. So there's our measurement. We'll copy it, we'll paste it, and that is pointing down around ballpark. Try and get as close as I can here. Right around this level here. Okay, which lines up roughly with this area all through here. And if I put a fixed range volume profile on the chart starting during the COVID crash, when a lot of people got into the market, and I measure this entire range, we're going to see that there's a fairly large volume gap that exists in this area here, and that in order to refill that, we would need to drop down close to this yellow line, which is literally where the head and shoulders is pointing to right now. If I put Fibonacci levels from the 2021 high to the 2022 low, we had a straight move down, and this looks like a retracement to the 80% level before continuation. But remember, markets love to range, and they love to test the bounds of their ranges. And so the argument can be made that this is a range low and that it's retesting it and that it wants to go higher. And maybe it doesn't go all the way back to the top back here, but maybe this ends up being some type of descending triangle where it wants to test the upside here. We really don't know that, and we'll just have to kind of wait and see what happens. What is interesting is this low in 2022 and this low that has been made so far in 2026. They both line up basically with the highest monthly close in history, which was this level here back in 2017. So they're basically bouncing off of the 2017 highs. Please remember, I'm some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always go out and do your own due diligence before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed the video, give it a thumbs up, subscribe to the channel. As always, please remember to trade safe and use proper risk management.